Shall we pray? Heavenly Father, we thank you so much for such another gracious opportunity like this. We pray that as we are about to learn, you grant us the spirit of wisdom and understanding, the retentive memory, so that that very day we can write our exam and pass once and for all. In Jesus' name, I will pray with thanksgiving. Amen. But this your number is only for special class.
Amen.
Is it like people have forgotten or they are tired of the class?
I'm sure they have forgotten.
They have forgotten. Myself, I forgot. I just saw the post on the
Me cry.
WhatsApp right now. I was on my way somewhere. I have to just return back and then join the class.
Okay. Last week we tried looking at IFRS 15. Remember, I took my time to take you through the. I took you through the revenue. Is that not it?
Yes,
How
sir.
to use the 5-step model to recognize revenue. Do you remember?
Yes, sir.
Okay. How to use 5-step model to recognize what revenue? Internal. Let's see. So we picked a question. In fact, I know you people, you understand. We said that first you have to determine whether there's a contract. And for you to know that there's a contract, one, there should be an agreement. Terms of payment should be there. The amount that has to be paid should be there. There should be commitment. It should be certain, or it should be probable that the revenue will be received. All those things should be there. Okay. Then what was the second one? You said that you are supposed to identify the separate performance obligations, right? And the separate performance obligation, we said that one key one will be the delivery of goods and what? Services. Is that not it? That is one key one. Delivery of goods and what? Services. And then another key one would have to do with after sales service. I get it. Some would have to come and do installation for you for free. Some would have to do staff training. Some will do what they call maintenance. It means that when you buy the product, they have embedded the maintenance contract. They have embedded the training. So these are separate performance obligations. You need to identify them. Then the next thing to do is to determine the transaction price. What are they paying for the whole package? Then after that, you allocate the transaction price to the separate performance obligation using the stand-alone prices. The last step is to recognize what revenue, either at a point in time or over time. We recognize revenue at a point in time if the separate performance obligation is one of, if it is supposed to be delivered or met once, but then you are done. But if it is supposed to be delivered over time, then the revenue too will be spread or allocated over time. So basically, this is what we did. Any question on that? Okay. So what I will do to help you is that pray that I get more time to do certain things. So that I can just select some few questions and then I will do it as part of the post. I'm trying to see whether after the post I can do some 10 dangerous posts. What do you think? I'll just team it dangerous posts. By you, let's see, even if it's 5.
Okay.
I'll be doing some few things for you. Then
Mm.
look at it. Okay. So let's
Thank
go
you.
to this. Those who just joined, I've already indicated that next week you have the deferred tax. But today I'll just explain something small for the purpose of the final account, and then the IFRS 16. I will send them to you within the week. I think it's like when FM and Malak, they're uploading the Zoom video. So when they are done, they'll start with that one. Otherwise, other subjects will be lacking. So you get it very soon, please. Let me pause this and then ask you something. Okay. So today I want to look at another question. Um, I'm not too sure, but I'm praying this question. Uh, okay, let me see. This should be 2017, 2018, 2019, 2020. I'm praying this question will result in we can have at least a 1 year that is will result in a loss so that you know how to recognize the revenue when it comes to losses. I mean the profit especially. I hope you are there. Hmm?
Yes, sir.
Remember I explained to you that if you expect a loss, then the total loss must be recognized. Is that not it? But if you expect a profit, then the profit must be recognized with respect to the progress measurement or what you know to be stage of completion. Do you remember?
Yes.
Uh-huh. Okay. So, bear with prayed. Let's pick a question. AC Boedi, a company which designs and builds race courses, commenced a 4-year contract early in 2017, at the beginning of 2017. The price was initially agreed at 12.5 million. I hope you can see or how to
Yeah.
increase it again.
No, it's okay.
You can manage. Okay. Profit, which was reasonably foreseeable from the year ended 31st December 2009, is to be taken using the output method. Okay. So under IFRS 15, we have the input method and the output method. You remember method 1? You remember method 1? Huh? Cost to date over total estimated contract cost. Do you remember?
Yes.
That is the input method. Then when you use the value of well certified, that is the output method. I hope you understand.
Okay.
So take note of that. The input method is the cost method. Then the output method is the value of well certified method. Yo. Okay. And revenue is to be taken on a consistent basis. Relevant figures are as follows: 2017, 18, 19, 20. Cost incurred in the year, they are there. This is cost incurred in the what? In the year. Anticipated future costs, they are also there. Well certified the invoice to date, they are there. Show how the above will be disclosed in the statement of profit or loss and statement of financial of AC for the 4 years ended 31st December 2017, 2018, 2019, and what? 2020. Now, um, a question like this, how do you start? Hello, talk to me. How do you start? Please, the last time I gave you a process, true or false?
Hello, Robin.
Yes.
I don't know, but it seems that where you are, some of us didn't get to that place. The cost, output, and input method, we never spoke about that.
Yes, I'm saying that I didn't talk about that. That's why I'm just telling you. I said I explained method 1 and the method 2. Do you remember?
No, I don't. The last time we ended at there was a question we solved and how it's
Senior, the last time,
we never did.
are you in a special class or the normal class?
I'm in a special class.
Special class, didn't I solve a question where we recognize revenue, cost of sales, and then profit to do?
No,
No, sir.
we didn't do that.
You know what?
I think you were not feeling well or something like that, and we had to end the class. So we didn't do that part.
Okay.
Sir.
But I took you through the process, right?
No, sir. No, sir.
Is that?
We just wrote construction contract and you ended. Construction contract.
We ended on construction
Please,
contract.
let me talk to one person. The one talking to me, the man. Let's talk. I'm asking. So I remember Joe Honey brought a question and we solved. And then that is a past question. Then after that, didn't I explain the process that you need to go through to like step 1? You need to calculate the expected cost. Sorry, expected profit or loss. Then step 2, you need to calculate the progress measurement or the stage of completion. Then step 3, you need to calculate the revenue for the year. Then we didn't do all these things.
No, sir. No, sir. Hey, sorry. Come and teach me. I'm going to chat something and send it to him and the rest of it. Come. I want to type something to him. So where do I type?
Madam Larissa, yes, I didn't know you. I met two people. Okay. Henry Barriga, your hand is up.
Okay. I want to say that we gave us the format, but we didn't tell the person using that particular format.
Oh, I can't hear anything. Didn't I do something like this? Special class?
No, please.
So we gave
No, please.
No.
Okay. The normal class, just give me some 15, 20 minutes. Let me take them through. Okay. Now, in solving the questions, anytime you have a question on construction contract, you are supposed to know how much should be recognized as revenue, cost of sales, profit. You need to go through the following 4 steps. After that, you are done. The rest is just copy and paste. 4 steps, 4 steps. Number 1, you need to calculate the expected loss or profit. Do you see step 1?
Yes,
Did you
sir.
see? So in step 1, how do you calculate expected profit or loss? You have a contract and there's a contract price. You want to know the total estimated contract cost. That will give you the profit or loss, true or false? True,
True.
right? So that's what you do to get the expected profit or loss. So you pick the contract price, you deduct the total estimated contract cost from it. So you get the expected profit or loss. Step 1, do you understand? Do you understand step 1?
Yes, sir.
Okay. Now step 2, you need to calculate the performance measurement or the progress measurement. Let me change this. The standard uses the word progress measurement. The progress measurement is what you know to be stage of completion. Nothing has changed. So Formula 1 is what we are referring to as the input method. Please, are you there? The input method is just contract cost incurred to date over total estimated contract cost times 100%. You see, we want to know how much should be recognized as per the stage of completion where we have gotten to. If that's the case, then we should take whatever cost that we have incurred as a fraction or as a percentage of the total cost that we are supposed to incur. Because once we incur the total cost, it means that the work is completed. So for us to know the percentage that is completed, we can just pick the total cost that we have incurred to date all over the total estimated contract cost. You understand? Please, do you understand?
Yes, please.
Special class, do you understand?
Yes, please.
So we say contract cost incurred to date all over the total estimated contract cost times 100. So this formula is the input method formula. Total estimated contract cost is just cost incurred to date plus the additional cost that you need to incur to complete the contract. That's the two give you the contract, the total estimated contract cost. That is step 2. Any question on step 2? Okay, formula 2 for step 2. That is what you call the output method. The output method is just the value of work certified over the contract price. You know, in method one, we were looking at cost. We can calculate the percentage using the cost or percentage using what? The price. If you are using the
Yeah.
cost,
Hello, sir.
yes.
Sir, please, we are understanding, but then we'll be much grateful if you could slow down for us, because it looks like the normal class had done this, and we, the special class, will have to follow. So kindly slow down.
That's why I've been asking whether you understand or not. So any
Yes,
place that
we
you don't
do.
understand, you just let me know that, oh, this place. That's why I keep asking. Do you understand? Do you understand?
Yes, and it looks like it's already written. So we know you give us some time to also write what they've written.
Oh, what is written in there? I can zoom it for it to be a bit smaller, then you take picture if that's what you want.
Thank you very much, sir.
Okay. So in step 2, we are just looking at value of work certified. So value of work certified over contract price. Don't forget the value of work certified and the contract price, all of them includes profit. So we can't say that value of work certified over estimated contract or no, because the estimated contract or does not include what profit. Once you use value of work certified, then you must divide it by what? The contract or price. So that is up to step 2. This is step 2. Do you understand step 1 and 2? Do you
Yes,
understand
sir.
step 1 and 2?
Yes, sir.
One tell some of them can tell me what I will do. Special class, I don't want you to say yes, yes, yes. The one I meet you, people will be talking plenty. It's rather unfortunate I didn't know you didn't do this one. I would have met you in one of the evenings to do that. So step 1, I'm saying that calculate the expected profit or loss. Calculate the expected profit or loss. And how do you calculate that? You pick the contract price Then you pick the estimated contract cost. Let me add the total. Total estimated contract cost. Special class, do you understand step 1? They will not even mind you.
Yeah, yes, it's clear now.
Then step 2. Step 2. You are supposed to calculate the progress. The normal student take advantage and understand it more. Okay. Calculate the progress
Yes, sir.
measurement. So yes, I know that them here no one no. Calculate
Sir,
the
I'm
progress.
so special. Yeah, normal. Normal class. I'm not special. You never try.
Wow. Okay, I'm going. So calculate the progress measurement. So we have the output and the input method. So under the input method, we say that the percentage of completion or the progress measurement is calculated as the cost incurred to date all over the total estimated contract cost. Times 100%. Do you understand? Please, do you understand?
Yes, sir. Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Now one class for the special for one just one just some more name cost why. Okay.
Someone buy your ana. I'm buy you. How many average?
Then output method. Okay, so I was trying to explain that the input method, when you say total estimated contract cost, then it is total estimated contract cost is calculated as cost incurred.
Sir, why the name input and output method?
Why the name input and output? The name
Yes,
was given by IFRS 15, but technically input because we are looking at cost, and output because it includes profit.
Oh, okay.
I getting it. You don't
Yes,
earn
please.
profit. You don't earn profit in your own business inside. No, profit is earned outside. You engage customers who are outside the company to earn that profit. But when you talk of cost, you incur the cost inside. You don't incur it on outside people. Do you understand? But these are the names given by the standard, that is IFRS 15. So, but it has not changed from the previous 11. The previous 11, we just had method 1, method 2. The method 1 was the cost method. The method 2 was the value of work certified method. That's all. Nothing has changed. So total estimated contract cost, we have cost incurred to date. Then you add estimated additional cost to complete. So that's how to calculate the total estimated contract cost. Okay. So now let's look at the output method. Under the output method, it is just the progress measurement is calculated as the value of work certified all over contract price times 100%. That's the output method. Do you understand step 1 and 2, special class?
Yes, please.
Yes, sir.
Step 3. Step 3, this is the point you are supposed to recognize your profit. You recognize revenue 2 in step 4. Then you are done. It's not difficult. So let's see how to recognize profit and or loss. So 1. Step 3. 1. Recognize profit based on the progress measurement. That is, if the entity expects what? Profit. But if the entity expects a loss, the total expected loss must be recognized now or immediately. Did you understand step 3?
Yes.
Okay. Now let me go further and then explain step 3 with the format. So let's assume that, let's see the format. You are calculating profit for the year ended 20 year 1. Let me just use just 3 years. Year 1, year 2, year 3. So this is what you do. You have to calculate your cumulative profit or loss. That one you use the expected, the progress measurement. You apply it on the profit. Take note, there may any you. Now, cumulative profit or loss. If it's a profit, then you need to apply the percentage on that profit for that year. Did you understand?
Yeah.
Assuming year 1, year 2, year 3. Year 3 will always be 100%. That is, and the last year will be 100% completed, right?
Yeah.
So let's assume it is like this. And the outcome can be measured reliably. Then, when you go to step 1, the expected profit for year 1, you need to multiply by 25%. When you get to year 2, if it's a profit, you need to multiply by 70%. When you get to year 3, if it's profit, multiply by 100%. I hope you understand.
Yes.
Okay. But the question is, what if at a point 1 or 2 will give us expected loss or gives us expected loss? Once it's expected loss, You don't apply the stage of completion. You don't apply the progress measurement. Do you understand?
Yes.
Once it's a loss, you don't apply the progress measurement. Why? Prudence concept. All losses must be anticipated. Once you expect a loss, in accordance with IS, I've done IS 37 with you. In accordance with IS 37, we say that the contract is onerous. Do you understand? Do you remember onerous contract? Do you remember onerous contract in your video? And if you don't watch it.
Yes,
Yes,
we do.
What is an onerous contract?
That is where the expected benefit is less than the anticipated loss.
Then I will kick it.
The contract
Onerous
You are there,
contract is where the cost involved in the contract is more than the benefit received.
Okay, so we are looking at the unavoidable cost of meeting the arrangement under the contract is more than the benefit to be received. So you may be expecting profit, then at a point, you see that as you get closer, you tend to expect a loss. We say that at that point, the contract has become what? Onerous. And one thing is that IS 37 says that make provision for the total expected loss. Total expected loss must be recognized immediately. So assuming any of the years is not a profit but rather a loss, you don't apply the state of completion. You pick the total loss. Assuming year 2 is a loss, you pick the total loss like this. Do you understand?
Yes.
You. After that, you need to deduct. We want the one for a particular year. So you deduct the previous cumulative profit. That's all. Very simple. Previous cumulative what? Profit or loss. So year 1. Year 1 will always be dash, true or false?
True.
True. Why? Because there's no previous. That's the first year of the contract. Is that not it?
Yeah.
So year 1 there, people will get it correct. Year 2, the cumulative that you calculated in year 1, this one becomes the previous for year 2. Is that not it?
Okay.
Is that not it? So we did
Yes,
that.
please.
Take note when you get to a scenario like this. Assume you have negative 20 already in year 2. You are going to less positive 30. This negative 20, so it will be like the negative 20 minus 30. That will give you a negative what? 50. Is that not
50.
it?
Yes.
So you take note of that trick whenever there's a loss. Because that day, I may not be there.
Uncle Robert, I have a question, please.
Hey, normal class no be some question no meet you.
The cumulative profit for year 2, not the previous one, the cumulative profit. Why are you lessening it?
I'm listening to your question. No?
Yes, I'm asking why you are lessening. Yes, where you've just cleaned.
I said that let's assume year 2 was a loss. If it's
We
a
are
loss,
assuming.
yes, all that I'm assuming.
Okay. Sorry.
Assuming year 2, you calculated the expected profit and it was a loss. So you have expected loss. I'm saying that whenever it's expected loss, you don't apply the percentage. You pick the total expected loss here.
Okay, that's fine. Thank you.
So when you get to year 3, the cumulative that you have calculated for year 2 become the previous, true or false? True. But this one, because it's negative, it will turn into nega po. You understand?
Yeah.
This, let's assume this is x1. So the This one, let's say, is S4. So S4 minus X1. You agree that it will be S4 plus X1.
Yes.
Obi chese oba sa mathematics we ya ompe kra eden ewo so eden no eden oto na oka sa wo na komum say eden na ekosi. Why you got into today if you don't understand, you know your problem is in class 4 when they were teaching you again. You have a positive figure, then they say minus a negative figure. So there will be two minus sign meeting. That will turn it to be positive. Special class, do you understand?
Yes, please.
Okay. So that is how to get the it's very simple. Construction contract, obi obakacho say di oboa. That is on tiase. Very simple. We use the same format for the revenue, how to recognize revenue in step 4. Anyway, anything. I don't know if we see. One more the standard book and I've solved plenty questions. Okwa also cause of Wibi. Now was all your pencil. Oh yeah, pencil and kasa. About what my baby until solve be solve but yes. Now let's look at step 4. That is revenue for the year. This one should be recognized with respect to the stage of completion. Recognize. Always recognize. Always recognize. See that the profit, I couldn't add the always because if you expect a loss, you need to take all. You don't apply the percentage. But if you are calculating for revenue for the year, that one, always recognize. Using or with respect to. With respect to the progress measurement. So format. The same thing. If I should stop, let me know. Should I stop?
Oh no, go ahead.
Year 2, year 3. It's the same thing we did for the profit now. So right here, cumulative revenue. That you need to apply the percentage of completion for that year. You apply it on the contract price. Apply on what? Contract price with respect to the progress measurement. So that is percentage of completion. Or let me say progress measurement. Progress measurement times contract price. I hope you understand. So that's what to give you the cumulative revenue. So X1, X2, X3. This should always be revenue. It can never be lost. So take note. So now we did add the cumulative, just like we did for the profit. Previous cumulative revenue. Previous cumulative revenue.
Please, the formula you just stated for the progress measurements, what does the PC stand for?
Progress measurement. It's supposed to be PM, right?
Yes.
Okay. So year one,
No, sir. You said progress measurement is equal to PC times contract price.
I think it's percentage completed.
I'm calculating
Okay.
revenue for the year.
So it's PC.
I'm calculating revenue for the year, and I'm saying that always recognize with respect to progress measurement. So in calculating the revenue is the progress measurement times the contract price. This cumulative revenue, this is how you are supposed to calculate it. Let me clean it so that it doesn't confuse you. But you should know that this cumulative revenue we are talking about here, it is the progress measurement times the contract price. Okay. So year two, this should be year X1. Year three, this should be year X2. Please, I hope you understand. Do you understand?
Yes, sir. Yes, sir.
So these are the steps. We are done. After that, the income statement is just a copy and paste. You have calculated your revenue, you have calculated your profit. The difference is the cost of sales. You are done. So let's see. Income statement extract. Income statement extract. So we have year one, year two, year three. So assuming this profit, the answers are, let's say, W1, W2, W3. Then this one, the answers are F1, F2, F3. Then we are going to recognize revenue. We are going to have F1, F2, F3. Do you understand? As I didn't mean, I want to ask you. The income statement, the revenue for the year that you have calculated, this revenue for the year, this profit or loss for the year. Are you there? Okay, so cost of sales. I think I have to stop asking you whether you understand or not. One thing I say, I want to be some question. So profit or loss for the year. So that will be W1, W2, W3. The cost of sales is a balancing figure. Did you understand the balancing figure?
Yes, sir.
Okay.
Yes, sir.
Yes, sir.
Cost of sales is equal to the revenue minus what? Profit. That's what you call balancing figure. If it's a loss, like in this situation, then it will be revenue plus the loss, true or false? Huh?
It's true. It's true.
Assuming year
Minus minus.
yeah, assuming year two, the revenue is 100. and the profit is rather a loss of 20. Then it will be 100 minus 20. So nege will be what? 4. This nege thing will play a very important role here. Okay, the question I want to pick now, there will be, I think, I'm expecting it to have contract debtors and then contract creditors. Level, the normal class, we didn't do that one. So take note, I'm coming to add something small. Because of, before that, the recognition that we have done here, before you can start from year 1, I mean, step 1, it means that the assumption is that the contract can be measured reliably. That is, the percentage completed can be measured reliably. At a point, the percentage completed cannot be measured reliably. When do we say that? Okay, you have started construction. You have bought the land, registered. You have just obtained a building permit. They are just putting out the profile where they use the wood to do those alignment and things. If they should ask you, what percentage of the construction have you completed? Can you be able to give a percentage? No, because the development part of the construction, you've not started. I don't know whether you get me.
Oh, yes, we get you.
So at that point, it will be very difficult to establish whether it was you should expect a loss or a profit. So at that point, we say that the outcome of the contract cannot be measured reliably. So if the outcome cannot be measured reliably, what do we do? Note well. If the outcome of the contract cannot be measured reliably, then this is what you do. The total contract cost incurred to date, recognize it as revenue, recognize it as cost of sales, meaning that you are not supposed to recognize any profit or loss. So we say that 1, there is no recognition. There is no recognition of profit or loss. Of profit or loss. Number 2, contract costs incurred to date is recognized as revenue and cost. It's recognized as revenue. And the same amount is recognized as cost of sales. Christian, answer your question.
Thank you, sir. Sir, with regards to the step 3, just as in step 4, we have to get to the cumulative revenue, we have to multiply percentage of completion by the contract price. But in the step 3, we are assuming something. So what exactly are you multiplying by something to get the cumulative profit as in the cumulative revenue?
It's the same thing. You pick the you need to pick the progress measurement. Then you multiply it to the expected profit.
Okay, so it means the expected profit will always.
No, you have to calculate in step 1.
Okay.
You
Thank
see
you.
step 1?
Yes.
Uh-huh.
Yes.
So that is for the
Okay.
purpose of step
Thank
3.
you.
But I said if
Okay.
you expect, if you calculate and it's a loss, you don't apply the state of completion. You take everything. I get in it.
Okay. Yes, sir. Thank you.
Radin, come on. Kaya wada. Okay. Now let's go how to recognize contract debtors, contract creditors. Then I'm done. Depending on the question though, but you let me see if I can show you this one, very simple one. There we go. Sometimes such a way that they'll give you progress billing, and they'll give you cash receipt. So depends on how the question will be framed. So you let me take you through calculating contract. If you have a question, raise your hand so that I call you. Contract debtors or payables. Year one. Was someone trying to call me or okay? I heard the lady's voice. Oh, madam, ask your question. Eh? Who is that?
I think also.
Osu. Madam, any question? Madam, hey, my time is going on. Hello, Madam Owusu, ask your question. Madam Owusu, I can't hear you. Madam Owusu. She's not ready.
So I think we should go on.
She's not ready to talk. Rocky, ask your question. Rocky, your hand is up. Ask your question. Are you guys serious? Okay. Okay. The normal class, this I didn't do it, so pay attention here. You need to pick the contract cost incurred to date. Contract cost incurred to date. If there's anything that must be excluded in the contract cost, you need to exclude that one. For example, where they have inventories which have not yet been used, that one, when you are calculating the cost incurred today, you see that you take it out. So it will also be out. We are looking at the cost that has been incurred. So if you have bought inventory and you have not used it, and when come, it becomes your contract work in progress. That is inventory work in progress. Okay. So you pick your contract cost incurred to date. Then you add your cumulative profit or loss. The one that you calculated in step 1. This one. Step 1, the one that you calculated, you add. when you add, whatever you get is how much should be what paid to you. Amount payable. You now compare it with the value of well certified. Let me even take this way out. Value of work certified. So value of work certified, what do? We take it out. We compare. This is how much you expect them to pay. This one is how much you expect. And the value of work certified is what has been certified to be paid to you. So now, whatever is left is this one. Let's take it out. If you did that and you get something that is positive, it means that they are owing you. If you get something that is negative, it means that they have certified more than you expect. So it means that that one will be all payables. Do you understand? Do you understand?
Yes, sir.
Okay. Now, another method is that sometimes they will not give you the value of first certified. They will give you what you call progress billing. Progress billing. And then cash receipt. So you can have the cumulative progress billing. That is year 1, year 2, year 3. So this is the billing that has been done. You compare with the cash received. Cash received. That is the cumulative cash. Cumulative cash received. When you deduct, if the answer is positive, then it's contract debtors. If it's negative, then it's payable. Do you understand? Do you understand?
Yes, sir.
It is electricity bill, yeah. Yeah, the bill bro. Bill now the boom. Now what how much you have paid free man. A car with the ECG. Now ECG becomes the construction company. Don't forget, this part of IFRS 15 is for those who find themselves working in a construction company. The construction contract is basically for construction company, how they should recognize profit, revenue, costs, as well as debtors and creditors. More one ceremony.
Hey, please.
Taking me time. Okay, so take a snap. Snap this one, then I'll give you the next half to snap. Eunice Pobi, your hand is up.
Okay, sir, please. Under the contract debtors or payable, The expected, I'm not sure what comes after the expected. Before the,
Don't
sorry,
let them
before the,
snap. I'll come there. I'll shift them for you. Please, are you finished snapping? Mr. John, are you done? Honorable John. Special class, Obi snapping fan to page. Are you done? I'm
I've snapped it. I'll put it there right now.
Okay, so you've snapped.
Yes, sir. Yeah, sure.
Okay. So this is the last aspect. Like this 1, 2, 3. Okay. So you can snap this one too. So, but have you seen it now?
yes,
Yes,
please.
sir.
They expect, I'm not sure what is supposed to come after that one, before the value of work certified.
Madam, it's nothing. When you add the contract cost incurred today to the cumulative profit, I said that is what you expect to receive. But the value of work certified is what have been confirmed to be received. So the difference is the debtors or payables. Do you understand? That's why I was trying to write expected. At first,
Yes,
I
sir.
wrote amount payable, and I felt that would be more confusing because of the payable that people would have to recognize. So I decided to clean it. So you can choose not to write anything there. It has, it doesn't have a name.
Okay, sir.
Can we now pick a question?
Yes, sir.
Yes, sir.
Special class people, are you fine now?
Yes, sir.
Okay. So once you understand every bit of this question, you should be able to solve all the questions in the standard book. You'll be fine. Just 1 minute.
Hey, why is it quiet? I'm confused though.
He said a minute. He's going to do something.
Okay.
Okay, let's start. So, Madam knows why confusion on camera. Why? Confused, Madam, read for us. Me had you. Only 48 people have joined. I was just checking your numbers. They have paid too.
So they are not aware.
No, it's not like that, but always these are the there's the number that we get. 4550, 4550. Half are not watching.
So they are not aware.
Aware of what?
They are aware.
Yeah, aware. I mean, always when we meet, they don't come.
Yeah.
That's what I mean.
Everybody's aware.
No, it's not everybody who is aware.
No, I'm talking of when you say everybody's aware, what does it mean?
It means it's on the page.
Today's
It's on
meeting,
the page.
I communicated it last week. This one I've sent a link. Now, what happened is that the previous meetings too, this is the number that I had. That's my concern.
Robert, probably they are not writing.
They are not writing.
Maybe they've changed their mind.
Some too, they are just interested in videos. They are using the video as an Indian movie. Okay, let's move on. Esibwedi Limited, the company which designs and builds race courses, commenced a 4-year contract early in 2017. The price was initially agreed at 12.5 million. I hope today they am not sleeping there. And I'm not wearing MPP colors. And now and the party color benamiche. Gumana. So if people I can't wear that attire again. Unless after the election. It's not fair.
Why were you wearing the music color?
Me launch is blue and we no blue na red be woman na mission. Public sector for say level 3 4 almost MPP colors.
What do macho? What do macho?
Level 3 4 na kan, level 3 4 na kan nye.
Omache me na me say me political party. Any party. Profit, which was reasonably foreseeable from the year. It tells you that it can be measured reliably. I hope you understand. That's what they mean. It's to be taken using the output method. And revenue is taken on consistent basis. Relevant figures are as follows. They are there. So show how the above should be recognized, blah, 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 blah. So let's see. We are going step by step. After step 4, the rest is just copy and what? Paste. So let's go. Step 1. It's 4 years. Okay. So step 1. Expected profit or loss. So we have for 2017, 2018, 2019, 2020. Do you all see it?
Yes.
Okay. Now let's see. Contract price. Contract price can vary. And you can take a question from the book. I will not teach you. Contract price can vary. If it varies, just pick the varied price. Hello?
Hi.
In 2019, assuming this price, which is 12.5, if in 2019 they increase it to 50 million, what are you supposed to do? You use 50 million in 2019. Is that not it?
Yes.
As simple like that. Okay. Just like the same way the expected cost will be changing all the time. So contract price, we have how much? 12.5 million, right? All figures in 30, step 1. Can we now move on? Contract price, say
12,500.
okay. Then total estimated contract cost. That is the cost incurred to date plus future cost. Do you agree with me? The additional cost complete. Do you understand? So in 2017, it will be what plus what?
2,700, 750 plus 750.
Do you
750.
understand?
Yes, sir.
Yes, sir.
Okay. So the total will give us how much?
750.
10,500.
9,500.
10,500.
10,500.
Who doesn't understand 2017? Me try be some question I mean few. Henry Barriga, your hand is up. Henry Barriga, your hand is up. Barriga Henry. I can't hear anything now. Based on quantumity. Oh, and penalty.
I'm going to use the output method.
See, I can't hear you. Your voice. There's no scratch, but I hear only bass. I don't get any
Talking about the output method.
Is that?
Something about the output method. Why are you not using the output method?
We've not gotten to that point. Oh,
exactly.
Is that one or step 2?
This is step 1.
Step 2. We are not there yet.
There was another hand. As on one, so lower hand. Let me lower by guys. Okay, let's move on. 2018. 2018 to what plus what?
2,700. Okay. No, 2,750 plus 3,000 plus 7,750.
This plus this plus this. Do you agree?
Yes.
Yes, sir.
The cost incurred in the year. So 2017 plus 2018 will give you the cost incurred to date. Do you agree?
Yes, sir.
They now go and add the future cost. You see that trick in the question. Sometimes they will give you the cost incurred to date. Sometimes they will give you the cost incurred for the year. So you have to cumulate them to get for the day, for a particular date. Okay, let's move on. 2018, what will be the total?
Yes, sir.
13,500.
So there is what? A loss, no be so?
Yes, sir. Of 1,000.
Well, this is giving us
2,000 profits.
2,000 profit. This is giving us 1,000 loss, right?
Yes, sir.
Okay. 2019 is going to be 2750 plus 3,000 plus 4,200 plus what? 1,550. Do you agree with me?
1,550.
Yes, sir.
And are this future costs also cumulatively? And the wow was him. Young
11,500.
11,500.
Yes. 1,000 profits.
So let it that.
1,000.
Then 2020.
2,750 plus
2020 will be
2,750 plus 3
plus 3,000, plus
plus
4,200.
4,200 plus 1,150.
How much are we getting?
That's all. Plus. Yeah.
Plus dash. So how much are we getting?
11,100.
What difference?
1,400.
1,400.
1,400.
If you check the total contract profit is 12,500 minus 11. The total contract cost, which is minus 11,100. What is 1,004? This 1,004, we have to spread it over the year. So when we add the profit for year 1, year 2, year 3, year 4, when you add all of them together, you should get 1,004. Otherwise, you are wrong. You understand?
Please, can you repeat that?
The 1,004 is the total contract profit. That is after completion. So when we get profit for the year, then we add all of them. You should get 1,004. If you add all of them up to 2019, you should get 1,000. If you add all of them up to 2018, you should get 1,000 negative. In that order, you understand?
Yes.
Yes, sir.
No.
Hello, sir.
Yes.
So please, can you take that again for us?
And then said I be until then twice. Once we get there, you know what I'm talking about. Step 2. Let's calculate the progress measurement. They said that this particular person who has been giving us a very wrong feedback is so on between the mark that. They said we should use the output method, stating the formula will earn you some ticks. So value of work certified. Or control value. Value. Value of work certified over contract or price. Times what? 100%. So let's calculate. 2017. What's the value of work certified? 3,000, right?
3,000.
So 3,000 over. So 3,000 here means 3 million. Is that not it?
Yes.
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 Okay. That would be 3,000 over 12,500 times 100%. 2018 will be 5,000 over what? 12,500 times what? 100%. 2019 will be 11,000 over 12,500. Is that not it?
Yes.
Then 2020 will be 11,000. Sorry, 12,500, eh? $12,500 over 12,500 times 100%. So let's go. What's the answer?
24%.
24%. The next one.
40%.
The next one.
88%.
The next one.
100%.
100%.
Any question here? When you use the cost method, the percentages will be different. I'll be getting it. Okay.
Do you say, please, a question?
Mm-hmm.
Please, you always have to follow all these steps when you are answering question on this topic. I mean,
is there still plenty?
No, because I'm asking because I saw some questions in the past session and I realized that they don't go through all the steps. They just come out with some of the steps and then they get answered. That's why I'm asking whether we have to always follow all the steps or sometimes you can ignore some of the steps when you don't.
You can't ignore any step. Just that they will not present it as steps. They will just present it straight away, and then, but when you pick the solution, you will never understand anything. When you follow these 4 steps, there's no way you get it wrong.
Yes, sir.
Okay. And yet the construction contract, the whole world, and FUPA. Now let's see. Step 3 and 4. We have 2017, 2018, 2019, 2020. So I didn't write the step. Step 3. We are looking at the profit for the year, right?
Yes, sir.
Do you know that this one in 2017 will apply the percentage? Do you know that?
Yes, sir.
Yes, sir.
Do you know that in 2018 we'll take the total?
We'll use the total.
Then 2019 will apply the percentage.
Yes.
You apply the
Yes,
percentage.
sir.
How we know those
Yes,
things?
sir. Yes, sir.
Yes,
Okay.
sir.
So let's go. Cumulative profit. Cumulative profit as at the end of 2018 and 17. As at the end of 2018. As at the end of 2019. As at. So let's see. 24%, we are in 2017. 24% of the expected profit. This is the expected profit or loss. That's how much? 1 minute right there.
180. 180.
480. 2018, 40%. Okay, 2018 is 1,000, eh?
1,000.
So we take the whole 1,000. 2019. 2019 will apply 88% on the 1,000 for 2019. Expected profit for 2019.
880.
880. I mean, shall
80.
2020. You apply
Sir, please,
100%
the
on
2018. The 2018, why are you not putting it in brackets?
This one, the 1,000. It's a loss.
It's a loss, yeah.
2020, let's go. 100% of 1,004. Calculator or what calculator? But we are saying
1,400.
we now get cumulative previous cumulative profit. I hope we are there. Year one will be dash, true or false? True. This will come to year two. How much? 480, right? Is that not it? So this will be 1,480. Is that not it?
Yes.
This 1,000 will be here. This should be 1,880. Do you agree?
Yes, 1,000 or negative.
1,000 negative.
So let's step 3, go over it again. I am saying Indian film now.
Yeah, it's loss, all right, but so it's
Okay,
negative,
yeah,
negative. That'll give you
negative, negative.
880 minus
1,000.
1,000. Nege 4. This one nege problem there. I am not some solve class 4. When you don't call class 4 no more.
But sir, when we still put it in bracket, we still put it in the bracket, it will apply.
When you put it in bracket, where?
As in the 1,000. If you bracket it,
yes, in bracket. So 880 minus negative 1,000.
If you bracket it, it will be 2 brackets. You see that this 480 is in bracket. Huh? We are deducting the previous profit. So if it's a loss, we are deducting the previous loss. Huh?
Yeah.
Hey, mathematically it's 880 minus 1,000.
Yes, sir. Yes, sir.
Okay, just share bracket in waiting. It's an super that was yo. What the mama sa naga in tetem. Class 4, normally miss one day. You'll be struggling with this. Yes, senior, class 3 or class 2. Depend on the school you attended.
I have a question, please.
So this 880 will be here. Do you agree?
Yes.
So let deduct. Yeah, how much? Shina, ask your question.
520.
So this is what I'm saying, that when you add everything, that's the profit for the year. Should we go to 1,400? This one. Do you agree?
Oh, okay.
If you add up to 2020, it should be 1,004. If you add up to 2019, it should be 1,000. If you add up to 2018, it should be negative 1,000. If you add up to 2017, it should be nice and cry. Is it this your 480? Is it correct?
It's correct.
Okay, so that is that. This one there 480 now. So the profit as you see there shows how the 1,400 profit.
Yes, it's correct too.
Has been split for all years. Okay, so that is that. And then I'm explaining now most of the Papa Police, ask your question.
And Robert. Well, I had a problem with the previous cumulative profit. It is the previous profits prior to the next year. So if it is 2019, it will be that of, I was thinking anyway, that of 2018 and
No.
2017,
No,
the previous years.
Yes, 2017 plus 2018. Yes.
Yes. So that is how it ought to be.
Yes. Well, you see that when you add 480 plus negative 1480, you get 1000. You get it?
Yes.
When you add 480 plus negative 1480 plus 1880, the answer you get is 880.
100. Okay.
Do you
Okay.
understand?
Yes, please.
And that's why we pick the cumulative straight away.
Yes. And then I have another question. With the, let's assume you are using the method 1 for this one, the input method. Hello, Uncle Robert.
Listening.
Yes, the input method. So what will be the total estimated cost of the contract?
The total estimated cost, let me check. But it was given all.
No, it was just a contract price that was given.
No. Cost incurred in the year was given here. Do you see that?
Yes, cost incurred in the
total
year.
cost is what we have calculated. Senior. Step 1. You can read that calculate. Me feel.
Okay. Okay.
Step 1, we calculated the total contract. Have you seen it?
So that is the, yes, the 10,500, 13,500.
So cost incurred to date will be the year's one when you add. If you are in 2017, you read that of 2017. If you are in 2018, it will be 2017 plus 2018. That that's cost incurred to date.
Okay, thank you very much.
Okay, step 4. See now, it's because they are asking questions. That is why it looks as if the steps are plenty. But I don't think this is a difficult thing to do. Or sinners, what do you think?
Just time that sometimes.
No, it's not time. If you understand this, you should be able to do this question in less than 15 minutes. If you understand what you are doing now.
Yeah, but the time to sometimes.
Yeah, but if you use 15 minutes for this, and this will just be a question under some other question. And
if it's for just 1 year, it's better. But when we have many years like this, it will take
most of the exam questions will be just 1 year.
Okay.
Maximum 3 years. Sometimes it will be in a final account, so 1 year pay. I didn't count why. Well, they are more per 1 year. More better. So step 4, we are looking at revenue for the year. Revenue for the year. So let's see cumulative revenue. Are you aware the debate on public debt has started again?
Yes.
As to who has done better in managing the public debt of Ghana well.
Said every Ghanaian owns 10,000.
I hope you are aware. So the public sector accounting students should be thinking around this area. What is the possible question the examiner will ask? The examiner going to ask for you to enumerate the best way of managing the public debt in accordance with the PFM Act or the regulation. You should be thinking about some of these things. Friday, you should be thinking of getting a question on one district, one factory. A question where the government will provide. At your level, I think if I'm supposed to ask a question, this is what I will do. I will make sure the government will give the entity a government assistance and then a government grant. Then I will just ask you to distinguish between the government assistance and government grant. And then just tell us how to recognize it. I expect that those assistants which are not grant, you tell me that they must be disclosed. You tell me that thing that must be disclosed. In that case, same question. I will make sure the entity will go and borrow money. So you'll be dealing with government grant and borrowing costs at the same time. If I am the examiner, what do you think? To be very nice, not be so. It was an uncle be the matter cumulative revenue. 24% of contract price. 24% of contract price. They're saying. I said that one always apply the percentage on the contract price.
3,000.
Confirmed.
Yes, 3,000.
2018.
5,000.
5,000. 2019.
11,000.
11,000. Hey, Madam Norman figures no. What's all? Madam Yankwa.
12,500.
Madam, one why mistake back on all that show money. Why? Minimum out. Previous cumulative revenue.
Dash. 3,000.
3,000.
That's 8,000.
3,000.
3,000.
3,000.
8,000.
Omo can kebi na dey no board.
8,000.
2,000. It will be negative.
I'll be there.
11,000 minus 5,000.
You get
6,000. 6,000.
And one that can 7,000 deceiving me. For
yeah,
deceiving a public officer. Policeman, when did they are mommy?
11,000.
11,000. So that would give us
1,500. 1,500.
1,500. Okay.
Mike, yeah. Sorry, if my phone maybe misled me. I didn't even have the time for today's meeting.
You know, it is even something most people didn't even know.
Why are people still saying most people didn't know this meeting?
It's true.
No, when I told the people that we'll meet today,
I chose on it.
No,
Sir, some people don't have data. They don't know that they have to go and
when we
buy
met
the-
last week, I said it.
They forget.
No, when we met last week, I said it. That
That's
this
true.
week the other class will not come, so we'll be meeting. Like every 2 weeks, don't I meet you?
Yeah, you said
So, and so what if you are not working? But it's not like I didn't tell you or something.
Yeah, you did tell, but just that we forgot, honestly. Most of us forgot.
Radio.
So I also think that sometimes some of us are engaged some way, somehow that we are not able to attend all the class. So I suggest that it's only fair we update the next schedule on the platform so that even the can read it from the platform and be updated. My suggestion is
Then someone should be doing that for us on the platform because maybe we are maybe. Wayne, you should be doing that on the platform. But Wayne.
Yes, sir.
You should be doing that. I know now you are on a campaign tour. But you should try to do that for us.
I mean, this I'll make tight armor. I just don't have time for myself.
Say you are on a campaign tour. When you have
just try pushing the rescue mission, you know. But let's continue. No campaign here.
That's why.
Maybe we might vote for your party.
The interest why? Interest me job win and some of it can one. Young so revenue. We have revenue for the year. Any
3,000.
3,000 for 2017.
So 3,000.
2,000.
2,000.
6,000.
1,000.
1,500.
1,500.
500.
Then let's look at the profit.
Okay. 480.
For the year, so 480.
1,480. Yeah.
1,880. 520.
So cost of sales, which is a balancing figure. 2,520, right?
520. Yes, sir.
2018.
3,480.
Yeah, Michelle, madam. Obi de we win on Tiasia, at now. For box, box. The best 6,000 plus. We are looking at minus, so 6,000 minus box is equal to 1,800. Fine box. Class 1 are there now. Figures simple increase. It is 6 minus box is equal to 18. Fine box.
120.
That way the waiting ammunition can a church be a match. Is what?
120.
Uh-huh.
980. There's no one. There's 980.
What is a I didn't know what I was saying. Every statement of financial position. Statement of financial position. Want to look at contract. Today your break, I will only give you 30 minutes since I sent the link and it took you 30 minutes to join. You will have the break for only 30 minutes. So we'll close at 11:30. Or if possible, at 12. Then you come at 12:30. It's not like I'm asking for you to negotiate too. I'm only informing you.
Hey, Robert.
Aye. Till when? When in that when your time in quiet campaign.
Right.
Yes.
Right.
One hour family on Casano.
So when are we closing?
Did I make kind I want it? We'll close at 11:30, 12. Then we'll come again. Then we'll close at 4. Yes.
Sir,
Yes.
some of us have management accounting.
Hello, sir. 2018.
You have management accounting what?
Mock 3 at 3:30.
Management accounting is supposed to start at 4. I'll tell the lecturer to start at 4.
So we beg.
Oh, we can revise, cry.
The whole week. The whole
we
week.
need time.
I'm coming.
We
I'm
need time
coming.
to rest a
I'm
bit.
coming. The whole
Sir,
week,
consider
you didn't
age.
revise. You see, that's one thing I hate about your class. You send a link, they will tell you that they have forgotten. So they will join after 30 minutes. Then after that, they will not even add more time to the to when you close. So they want to reduce the closing time too. Huh?
So we beg. Consider.
No more comments.
3:30, so that you rest before we
We
continue.
are ending the class next week, Saturday. Are you aware of that?
No.
And then I'm telling you.
And your cash flows where?
Is that?
Cash flow statements.
Good. So I'm supposed to do this, do the final account and do the cash flow. In any event, I'm sure I will add one of the evenings coming to finish up. Then we are left with console, what you have done already. So that one we will just be solving more questions.
Hey, sir, why so soon?
And then I'm a so soon, baby.
Hey.
It's not easy.
Madam, the exam is on the 30th of November. The exam is on 30th November. I will take this question and say do also too. Okay. The exam is on 30th November. Last sitting, we had a lot of passes. CA was even surprised. First time in history, 414 students qualified. So I've come to believe that students only have time to learn after they've taken their leave. So once we end on the 8th or so, the students will have 3 weeks to prepare for the exam, rather than to end somewhere 20 something and then they have just 1 week to prepare. Did you understand?
So that is very, very true.
Good.
Yes, I think
once we are done with what we are supposed to teach you, and then we leave you, doesn't mean that that's all. If you have any question, we can be doing discussions on the platform. If you have any question, you can ask. You understand? If you come across anything and you want explanations, I can always do that for other lecturers to be assisting you. So you write the exam. You understand?
Sir,
Uh-huh.
sir, please, what about the intervention class?
That one will start on the 10th.
And Uncle Robert, how long is it, please? The
Just
intervention.
2 weeks, but the timetable will come out very soon.
Okay, thank you.
So how much per paper?
Don't worry, all of them will come. Let's continue. Statement of financial position. Oh, more than me jam one, maybe some questions. Not time national. Mupesa. Workings 5. Henry Barriga, your hand is up. Obama base. Yes. Okasa mente. Sina ya chat wa okasa ni na base nko a mente hwe. Chat on the chatting session. I mean the chat session. Yes, there. 5. Let's look at the debtors or creditors. Just after this topic, I'm going to publish account. That is final account. I'm going there, so don't worry. Contract. I had something like that. Debtors or creditors. those who join late, I had told your people that within a week you have the video on the leasing and then the deferred tax. I wanted the other subject to, I wanted them to upload their video. So as you have gotten your Zoom meetings, we wanted them to get their Zoom meetings. So I think by Monday or so, the last is FM and management account. By Monday or Tuesday, they will have it. So I think by Thursday, you should have your remaining videos. That's the standard, the 2 standards. I'll just send them to you. They will start uploading them to you. I'm pleading you go through the consultation. Concern Mary, Asama on Mary. I'll only be picking more complicated questions to solve with you when we meet. It's one solve where I'm one solve so.
And I say, okay, I say a final accounts, no, anchor, over send the video before I say I hear interactive sessions, no.
Yes, but I didn't send. I realized me sending video na one shot. There's maybe cost 90. So after this, that's what I'll be doing. I'll be taking you through those adjustments that is required, some few ones. Those adjustments that is being asked, especially the one under revenue, go through them. Go through all of them before we start picking questions. I'll be get it.
Yes, sir.
Those who have the book, I've done those things in the book, so wouldn't run much. I told you we read the book, so yeah, higher home 2017.
So please, what's the last date for registration with ICA?
I'm checking you back as I cut 2 weeks.
It's 13th.
13th November.
Yes, please.
Yes.
It seems their site is down.
Yes, so that's what they say.
I'm the Kakraba count. The be registration I end. Last minute people.
Yes, enough tuition,
time value of money.
Cost incurred to date.
The kind of year class why so they can class there now, you know. You go so risk.
Cost incurred to date. Cost incurred to date. If you have to go back, a Juma Benny. Oh, this is a whole lot of this is what I don't want to. That's why I want you to get the book. As I figure about could be a just a please write them down. Let add 2017. 2017, let add cost incurred to date. That is 275. You write it down. After I'll take it from you. 2018. Are you seeing it? 2018 will be 2750 plus 3,000. Do you see that?
Yes.
2019 will be 4,200. Do you see that?
Plus 3,000 plus 27.
2019, you are adding up to 2019. 2020, you add all the cost incurred. I hope you are there.
Yes, sir.
But what is given is for the year. We want to date, to a particular date. So have you gotten all of them 2017 to 2020?
Yes, sir.
Okay. Obi or buy or man figure that or set a record, Koso. Or sooner set record setter. Guinness Book of Records. Cost incurred to date, Yankwa
2750. 5750. 9950. 11,100.
Hey, did you take note of the value of well certified? Don't worry, we'll come there. Let's pick our profit first. We want the cumulative profit for all the years. 2017 is 480, right? 2018 is negative 1,000. 2019, 880. 2020,000 for. Do you understand? Do you understand the figure that I'm picking?
Yes,
No,
step
sir.
3.
Okay, step 3. That is cumulative profit to date. All right, so 480 cumulative profit to date. Anka ende ya to at the end of 2020 uja edwuma nke sika ose wunya the cost that you incurred, which is 2750, plus the profit that is attributable to the 2750. I hope you are there. And the profit that is attributable is the 480. Okay, 2018 you're saying?
Negative 1,000.
Regina Nelly, Shonye, a brow ball, me board the son. Metamwako waiting list. Will I be a bad person to take her to waiting list? For wasting my time.
Unintentional.
Forgive her.
Sorry, oh, sir, sorry.
Sorry, Ben.
I said that.
I said that.
The last warning.
Minimum not pass up, but then you go waiting list. Okay. She was answer I be one.
Don't worry, we'll take our revenge later.
Then revenge. Revenge. Say a movie. But young cost. 2018 cumulative profit to date, saying
Negative 1,000.
negative 1,000. Then 2019.
880.
Then 1,400, right?
Yes, sir.
Let add. Then you compare with value of work certified. Value of work certified. Do you remember the amount, or we need to go back? Take note of this. Please write them down so that after you give it to me. I just know you did what I said. Please, are you done?
Yes, sir.
Okay. It is well. You're only praying for peace. That's all what you seek for. Value of work certified. Okay. After that, I'll tell you something about the politicians. Yeah, give me the figures.
3,000.
3,230.
3,230.
Huh?
3,000.
3,000. Yeah, 2018.
5,000. 5,000.
2019.
11,000.
2020.
12,500.
Now let's add this one. 12,500, right?
Yes.
Yes.
So give me the rest.
10,
2017.
830.
Which one?
2019, 1080, 830.
2018.
4750.
4750.
3230.
3230.
3230.
30.
So let's add up.
230.
230. The next one.
Negative 250.
Negative 250.
170.
170. Negative.
So that is the positive. Then payable
Payables.
is the negative. More one I say money.
Yeah.
So we come here. That is 280. Current liabilities. Contract payables. The debtors you can write contract debtors also. Dash. Then 250. 170. I'm so much interested in the public debt debates that is still pending. I think last week I sent a link to the people to watch. I think that was immediate fee. I'm hoping within a week the other party to come and respond. Then we'll look at it. Those are the areas our students should be interested. And yes, you. Ben, when are you there? All right. Let me pause
Very
there.
much.
Daddy Lord, we thank you for learning with us. We pray that the little you have learned today, you bless it for us so that that day we can write and pass our exam. In Jesus' name, I will pray with thanksgiving. Amen.